For many Americans today, there's no bigger drag on their families than student loan debt. More than 44 million Americans cumulatively owe more than $1.5 trillion in student loan debt. That is greater than the total amount of credit card debt in America. Unlike most of us, who could borrow a reasonable amount to finance our college education, this generation of college graduates starts off with an average debt of $27,000 on day one after graduation. Many have much, much more, especially if they were duped by this notorious for-profit college industry in America. I hear from young people who've had to forego home ownership, starting a family, buying a car because of student debt. I also hear from those who've gone back to school and stay in school because they can't imagine starting to pay back their debt. They dig the hole deeper every semester. Too often this debt involves their parents and grandparents. It was reported a couple years ago that a grandmother who was kindly and signed on as a co-signer of her granddaughter's student loan debt after the granddaughter defaulted was now being chased by the federal government, who threatened to attach her Social Security benefits so they could recoup the student loan that her granddaughter signed up for with her co-signature. That's why we're bringing an amendment to the floor, and it should be part of this debate on this bill. If we're going to talk about reform for banks, let's talk about a reform that American families really care about: student loan reform. One of the things included is a borrower bill of rights. Once a student graduates, their loans go into repayment with private financial institutions, or in the case of federal student loans, servicers contracted by the Department of Education. These services are supposed to help the borrowers navigate the repayment process by making sure they're on the right repayment plan, processing payments correctly, keeping borrowers informed. Well, how are they doing? Between July 2011 and August 2017, the Consumer Financial Protection Bureau handled almost 51,000 complaints related to private and federal student loans. The majority of the complaints, both private and federal, address difficulties in interacting with lenders or servicers. This is unacceptable. Lenders and servicers should be making repayment easier, not more difficult. To improve federal and private student loan servicing, our amendment includes the Student Loan Borrower Bill of Rights. It requires notifications and protections for borrowers when a loan is sold or transferred to another company, or when the interest rate or other key terms of the loan change. It establishes a standard for applying payments so that payments are applied in a way that most benefits the borrower. It protects borrowers from unreasonable late fees. It requires servicers to provide borrowers online access to information about their loan, like payment history and loan terms, and require key information to be disclosed to borrowers by servicers. The Student Loan Borrower Bill of Rights also prevents servicers from using pre-dispute mandatory arbitration clauses to prevent borrowers from holding them accountable in court. While federal student loan borrowers often face challenges, the situation is worse for borrowers who have private student loans, not government loans. There's now an estimated $165 billion in outstanding private student loans. The Consumer Financial Protection Bureau reported in 2012 at least 850,000 private student loans worth $8 billion were in default. Private student loans have uncapped variable interest rates that can spike to 20% and more, hefty fees, and these loans often lack the protections that come with federal student loans. Unfortunately, many student borrowers and even their family members don't understand the difference between a federal loan and a private loan, and they end up taking out costly private loans when they're still eligible for federal loans that are much more reasonable with lower interest rates. Almost half of private loan borrowers in 2011-2012 did not max out on their more reasonable federal loans and ended up taking out private loans that were worse. That's why I introduced the Know Before You Owe Private Student Loan Act, included in this amendment, requiring borrowers to be notified of the difference and their eligibility. Finally, the amendment requires private student lenders to offer student loan rehabilitation consistent with federal student loans. It gives private student loan borrowers that default a fresh start. My amendment also addresses the key issue of bankruptcy. Did you know that if you borrowed money to buy a home, buy a car, buy a boat, then lost your job and couldn't pay off those loans and went into bankruptcy court saying, I don't have any money left, I can't pay off these loans, that the court could discharge those loans for your home, your car, your boat in bankruptcy and say, we've wiped the slate clean. You filed for bankruptcy, you qualify, the slate is wiped clean. However, if one of your loans is not for a home or a car or a boat, but a student loan is not dischargeable in bankruptcy. Now, originally this was done in the 1960s because there were some students exploiting the system, borrowing money, then declaring bankruptcy after graduation. Then we started extending it not just to federal government loans, but to private loans, and we extended it to those loans that were given by these notorious for-profit colleges and universities. And we said there's one provision. If you are facing undue hardship, then perhaps we can forgive even a student loan. Almost never does a court find undue hardship. We try to address that. We try to address it in terms of those who clearly are facing undue hardship and need a helping hand. What are the categories then of those facing bankruptcy that cannot discharge current student loans that would be able to discharge them under our amendment? It would be those who have been determined by the Veterans Administration to have a service-connected disability. Should we give disabled veterans in America a helping hand like this? I think so. How about the family caregiver of elderly or disabled family members or veterans? How about those receiving Social Security disability, whose only income is Social Security? How about those who spent years at a low income? Think they might be facing an undue hardship and can't pay back a student loan? I think so, but the law just doesn't allow it. Mr. President, there are other provisions as well, but I see I have colleagues on the floor who want to speak as well, so I've spoken for a while, and I'm going to stand down in just a moment. But if we can take up the issue of making it easier for banks to do business in America, can we spare a few minutes to debate whether or not we can make it easier for student borrowers to survive when the student debts that they face are stopping them from moving forward in their lives? Massive debt that stops them from getting married, buying a home, a car, starting a family. That's the reality for many families across America. I hope my colleagues will join me. A lot of us give some great speeches about student loans. It would be terrific if we could allow on the floor of the Senate those speeches and a vote on that critical issue. Mr. President, I yield the floor.